Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today it is March 28th. We are going to focus on Kraft Heinz. Probably have some of their products in your refrigerator or in your cupboard. Let's jump right in the video. About the Kraft Heinz Company, we are driving transformation at the Kraft Heinz Company, NASDAQ ticker KHC. Inspired by our purpose, let's make life delicious. You can read the rest of that. Go ahead and pause it if you want to know more about them. Check them out. kraftheinzcompany.com. Sorry, I had to read that again. They've got it all smushed together there. kraftheinzcompany.com. That is their homepage where I pulled this information from. And here are some of the brands. Again, you probably are well aware and maybe have them in your cupboard or in your refrigerator. I know I do. This was one of the first companies I invested in. I was reading some stuff by Buffett, and he recommended investing in things you know. And as long as I can remember, Kraft Heinz, whether it's their mac and cheese, their ketchups, their mayonnaise, they have always been in my grandmother's, my parents, my family's fridge and cupboard. So it was one of the first companies that I invested in. As you can see here, Oscar Mayer's, Philadelphia, cream cheese, right? Mac and cheese, like we said, Kraft mac and cheese, Capri Sun, Kool-Aid. I mean, who doesn't know Kool-Aid? Classico, Jello, right? Velveeta cheese, Grey Poupon. I don't know if you remember those old commercials from back in the 80s and 90s there. The Grey Poupon commercials were always funny. Maxwell House, right? So Lunchables, my kids love Lunchables, right? So a lot of the products you're probably aware of. Again, if you want to know more about them, check them out, www.kraftheinz.com. Now, the reason we are looking at them today, there was quite a bit of green, kind of a mixed bag actually, a little bit of green, a little bit of red. This was one of the companies that was down 0.54% on the day. Not a huge drop, but there really wasn't anything that was down more than 2% or so, and a lot of those are companies that don't pay dividends. So this is the one we thought we'd focus on. The Kraft Heinz Company, ticker KHC, out of the consumer staples sector, closed out the day at $38.39. Looks like they are up a little bit in the after hours here. And 52-week range as low as $32.73, as high as $44.87. So kind of cruising midway between their low and their high. Average volume 6.7 million. Today was 3.9. Market cap of 47.105 billion. A beta of 0.70. So beta just basically means the market. A 1 is the market. Anything below 1 is less volatile. Anything above 1 is more volatile. So this is less volatile than the overall market. PE ratio is a little high, I'll be honest. Price to earnings here is 20.10. I like things back in the teens or lower. So this is a little bit high, but I feel like this is one of those ones that's kind of always high. Now, if you do look at their forward price to earnings, it is a little lower than their current one. But I like to go on what's current, not what the forward outlook is, because you never know. Things could change. Earnings per share, EPS, is $1.91. And the earnings date coming up sometime between April 25th and May 1st. For dividends, $1.60 paid out on the year. They do pay out quarterly. We'll see that here in a moment. And they do have a nice dividend yield, 4.15%, at least now. I think my cost basis is a little bit lower than this, so it's a little bit higher, but right around 4% or higher is nice. Anything over 3%, in my opinion, is very nice. Ex-dividend date was March 9th, so if you haven't bought them yet, you would not be in line, or don't own them yet, you would not be in line for the next dividend payout. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information. I am not affiliated. They think it might get to $42.67 over the next year. You can clearly see a sell-off throughout the day, even though it was only 0.54% decrease in the price. Now, I always say you want to do more research if you're interested in these, so don't even take my gospel. Don't take my word for it. Get in and look at the financials. Get in and look at the statistics. Some of the information I pulled from the statistics, I like this one here. This one is a good way to check what they call dividend yield theory. So basically, you look at the 5-year average, right, 4.91, and the current or the forward dividend yield. That's what it is right now, 4.15. If it is lower, like it is right now, the 5-year average is 4.91 and the current dividend yield is 4.15, that means it is potentially overvalued. So this is one we haven't seen before. A lot of the other ones we've looked at, the 5-year average is lower than the current average. This one is just the opposite. So 5-year average 4.91, forward dividend yield or current dividend yield 4.15 speaks to potential overvaluation. It's overvalued. If it was the reverse, like we've seen in a lot of the other instances where this 4.91, let's say it was 4.99 or 5.2 or something like that, if it was higher, then that would speak to potential undervaluation, right? So this one is potentially overvalued based on dividend yield theory alone, but that is not the end all be all. It's just one metric I use to look at a company and say, is this worth me investigating further? Am I really interested? Again, this one, in full disclosure, is already in my portfolio, so I am long Kraft Heinz. This is another one I'd like to look at. This is under financial. So this here is under statistics. A lot of other statistics in there. You'd look at margins. You could look at price to book, PEG ratio, all that in statistics. Financials is another one that I like to look at. You want to look at the free cash flow. That's what they pay the dividend out of. So you want the free cash flow to be growing over time. So 2019 was at 2.7 billion. 4.3 billion in 2020, 2021 4.5. So nice growth there from 2019 to 2021, but then a big drop off here from 2021 to 2022. So you'd want to understand what that is. They may have paid down some debt. They are rebuying a considerable amount of shares, so that might be part of it as well, but they were back here in 2019, 2020, and 2021 as well. Looks like they actually bought less shares there in 2022 than they had been the previous year. So something here is off. Their free cash flow, that's a big drop off, right? You had pretty good, nice, steady growth there, and then boom, 2021 to 2022. So you want to look at that and see what's going on. Now, I always recommend more than one source also. So another one that I like is stockanalysis.com. Again, you don't have to use either one of these sites. They're just sites that I like, but always check to make sure that the information that you are getting is correct by checking it against another site and location to verify the information. So according to stockanalysis.com, they've had 26 stock analysts take a look at this. They have a hold, right? Consensus hold on it right now. So if you own it, don't buy anymore. And if you're looking to buy it, don't buy it yet. And the reason probably is they have a low estimate at $35.35, which would be a 7.92% decrease in the stock price from where it currently sits. If it hit their average, it would be $43.52. That would be a 13.36% increase. And if it happened to hit their high over here, $50.40, that would be a 31.28% increase. All the while, you could collect that 4+% dividend yield, at least if you bought them now, or higher if you waited for them to pull back. And as I stated before, this is where I show you my position. I am long Kraft Heinz, right? Not all the stocks that I cover I have in my portfolio. This one I do, and this is going to be a little misleading because currently I have a option play on this one with a strike price of $39. So if it hits $39 or above over the next, I think it's 2 weeks, April 6th, I believe, was the close date, but I'd have to go back and check. I don't have a calendar in front of me. But it's 2 weeks, I believe, and it was a $39 strike price. So if it reaches $39 or above, then I will have to sell it at that $39. So I actually have 138.39 shares here, right? Because it doesn't show the 100 shares that are in the option play. Those are tied up. I am up 3.12%. So as I mentioned, if you watch my channel on the options that I'm doing, I'm doing on positions that I am currently up, that I wouldn't be offended or would be all right with being called away. So this is one, if they were called away, to be honest with you, I feel like they might be a little overvalued. So I might look to get back in them when they pulled back a little bit. Or I might look to roll the funds into another position. I'm looking at possibly Kroger. Pfizer was one I was looking at. CVS. There's other companies that I'm interested in. But let's get back to this one. So a couple things I don't like about this. As we mentioned, they are a quarterly payer, paying 40 cents per share. And they've been paying that 40 cents for a considerable amount of time. So no dividend growth, right? 40 cents all the way going back. And you could have went even back further to 2021 and beyond. And they've been paying this 40 cents for a long time, right? So no dividend growth. And another thing I don't like, I usually look for companies 75% payout ratio or lower. This one is 82.90. So another negative there. So that is part of the reason I'm all right with running options on this one. And if they get called away, reallocating those funds elsewhere. I don't know that I'd sell the additional 38.39 shares, but I may just, if they get called away, sell out of the position altogether and look to get back in at a cheaper price. But we will see. I will have made a little bit of profit on it, 3+% there. So I'm fine with redistributing, around $4,400 into other positions that I feel right now are more undervalued. And for this one, I would not be interested unless it got back closer to that 52-week low, really, for Kraft Heinz. You know, when I was buying it, like I said, I think it was right around a 4.3 or 4.4% dividend yield. So I liked the high dividend yield. There weren't a lot of other companies at the time paying that. Right now, a lot of companies have pulled way back. So there are a lot more options with growing dividend yield, paying 4+%. So this is one I am not interested in unless it got back into the mid to low $30 range, and I am selling options and wouldn't be upset if it got called away, as I stated. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down there. Join us on this journey to financial freedom. If you have not started your own brokerage account, there is a Webull link down in the description below. If you use that link to start your brokerage account, put some money in there, buy your stocks in there. You'll get some free stocks. I'll get some free stocks based on whatever their current promotion is. It is a way to help out the channel. But again, dropping a comment down below, hitting all the buttons, share with anyone you think might find value, hit that like button. Drop a comment. Like I said, I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have stocks you want me to cover in the Stock Pick of the Day series, go ahead and drop them down below, and I will work them into the rotation. With that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, I mentioned it yesterday, but it bears repeating. I am going to be on vacation starting tomorrow, so I probably will not be putting out many videos. I might try to put something together later tonight on the stocks to watch for April video and have that come out maybe Friday or Saturday. But the Stock Pick of the Day series will probably be on pause until I get back next week sometime, unless I find some time on my vacation to get in a video or two. We will see, but I'm not making any promises. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and Ken's money and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.